Hello, dear friends. Welcome to this session of bookkeeping and accountancy, not for profit concern. In this session, I am going to solve question number 7. Let us read the question first. From the following transactions of receipt and payment account of Pavan Putra Hanuman Vyamshala, Parvani, and the adjustments given, you are required to prepare income and expenditure account and balance sheet as on 31st March 2019. So this is the receipt and payment account given for the year ended 31st March 2019. Debit side, that is the receipt side, all the receipts are given during the year, and credit side, all the payments are given during the year. This balance is the opening balance of cash, as it is the balance of previous year. It will not be recorded in the current year. It will go to previous year's balance sheet. In this question, if you observe adjustment number 7, capital fund of rupees 70,000 as on 1st April 18, that is in the beginning of the year, is given. Since the capital fund is given, there is no need to prepare the opening balance sheet. So we will ignore this cash in hand, as this is the opening cash balance. Next is to subscription. It is income. But there are two subscriptions given in the question. First, subscription for 2018-19, rupees 18,000. This is the current year subscription. So this is the income for current year. And subscription for year 2019-20, 410 is given. This is the subscription received for the next year or the preceding year, which is received in advance in the current year. So this becomes the liability for current year. So this is the income, profit, income and expenditure account credit side, and this is the liability, balance sheet, liability side. Next, donation is given. As discussed in earlier sessions, general donation is to be treated as income, and if it is special donation, then it is to be treated as liability. Next is to receipts from entertainment. It is income. To interest, income side, and entrance fees. If information is given regarding entrance fees, we will follow the instruction. Let us have a look at the adjustments. Yes, adjustment number 5 says 50% entrance fees is to be capitalized. Means out of this entrance fees, 50%, that is rupees 3,100, is to be capitalized. So we have to add it to the capital fund, and rest 50% is to be treated as income. So 3,100 income and expenditure account credit side, and 3,100 it is to be added to the capital fund. Let us have a look at payment side. First is by salaries. It is expenditure, income and expenditure account, debit side. Entertainment expenses, income and expenditure account, debit side. Sundry expenses, expenditure. Electricity charges, expenditure. Rent, expenditure. Investment, it is purchase of investment, so it is to be treated as asset. We will have to record it to balance sheet asset side. Printing and stationery, expenditure. Postage, expenditure. Fixed deposit, asset side, and closing bank balance and closing cash balances are asset side of the current year's balance sheet. Let us read the adjustments. There are 500 members paying for annual subscription of rupees 50 each. If we multiply 500 by 50, it will be 25,000. Out of this, only 18,000 is the amount of subscription received in the current year. So, subscription of rupees 7,000 is not yet received. It is outstanding subscription. So, we will put a tick on subscription for 2018 and 19. 7,000 outstanding subscription. Next adjustment is outstanding salary, rupees 1,200. Put a tick to salary. we will have to add rupees 1200 to salaries. Next, assets on 1st of April 2018 were as follows: building 50,000 and furniture 15,000. So these are the assets appearing in the previous year's balance sheet, but we are not supposed to prepare the opening balance sheet, so we'll ignore the opening balance sheet part. But these assets being fixed assets, we will have to transfer them to current year's balance sheet. So we will transfer them to the current year's balance sheet. Building asset side and furniture asset side. Next, provide a depreciation on building and furniture. So we'll put a tick on building and furniture so that we will come to know while posting that there is adjustment on building and adjustment on furniture. Next item, 50% entrance fees is to be capitalized. We already discussed this part. Out of the 6,200, 3,100 is to be treated as income and 3,100 is to be added to the capital fund. Interest on investment at 5% per annum has accrued for 6 months. This is the amount of investment, rupees 15,000, on which you have to calculate 5% interest for 6 months. This is outstanding interest on investment. So we'll put a tick to investment. Next, capital fund 70,000 as on 1st April 2018. It is the capital fund in the beginning of the year. So we will record it to balance sheet as capital fund, rupees 70,000 to the inner column. In this capital fund, we will add surplus or we will deduct deficit, and also we will add 50% of the entrance fees because it is to be capitalized. Let us now post all the receipt and payment account items to income and expenditure account and to the balance sheet. This is how our income and expenditure account will look like after posting all the receipt and payment items, and the balance sheet after posting all the receipt and payment items. Let us now move ahead with the adjustment part. Being adjustment, we have to give two effects for each adjustment. Very first adjustment is there are 500 members paying an annual subscription of rupees 50 each. If we multiply 500 by rupees 50, it will be rupees 25,000. So total subscription for the year should be rupees 25,000. Out of this, subscription of rupees 18,000 only received. So subscription of rupees 7,000 is outstanding for current year. We will have to add it to the subscription. Add outstanding rupees 7,000. So total subscription for the year is 25,000. It is the income receivable. Second effect will go to balance sheet asset side. Outstanding subscription rupees 7,000. Next adjustment, outstanding salary was rupees 1,200. We'll have to add it to salary. Salary, add outstanding rupees 1,200. Total salary for the year is rupees 7,200. Being outstanding expenditure, we'll have to record the second effect to balance sheet liability side. As outstanding salary rupees 1,200. Next adjustment, the assets on 1st April 18. This is the date on which the business commences, on which the new year begins. So it is the opening balance of building for the current year. Buildings opening balance is given in the question rupees 50,000 and furniture at rupees 15,000, on which we are supposed to calculate depreciation at the rate of 5% and 10% respectively. So on building it is 5% and on furniture it is 10%. So we will deduct it from building less depreciation at the rate of 5%, it comes to rupees 2,500. So written down value of building is now 47,500. We'll have to record the second effect to income and expenditure account debit side. To depreciation on building rupees 2,500 and on furniture less depreciation at the rate of 10% comes to rupees 1,500. So balance is 13,500. 1,500 second effect will go to income and expenditure account debit side to depreciation on furniture rupees 1,500. Total depreciation for the year is rupees 4,000. Next adjustment is 50% entrance fees is to be capitalized. Entrance fees total amount given is rupees 6,200. Its 50% comes to rupees 3,100. We have recorded as income, and rest 50% we will have to capitalize. So we will add it to capital fund. Add entrance fees rupees 3,100. Next is interest on investment at 5% per annum has accrued for 6 months. Amount of investment given is 15,000. So on 15,000, if you calculate 15%, 5%. So answer is 750 for the entire year. This is the interest on investment for a year. And if you calculate it for 6 months only, then it will be rupees 375. So we'll add it to investment. Add outstanding interest rupees 375 being income. The second effect will go to income and expenditure account credit side as by interest on investment rupees 375. Capital fund we already posted to the balance sheet as capital fund rupees 70,000. After recording all the adjustments, it's time now to find out surplus or deficit for the year. Credit side total is 40,275 and debit side total is 20,880. So there is surplus. We will deduct rupees 20,880 from 40,275 and the difference is rupees 19,395. This is the surplus for the year. We will record as 2 surplus transferred to capital fund. We will add 19,395 to capital fund. Add surplus rupees 19,395. So total capital fund is now rupees 92,495. And the balance sheet total is 94,105, 94,105. Solve this question again on your own and practice similar type of question. Any query, any difficulty, you may ask me anytime. Thank you.